RBI Governor మీడియాతో మాట్లాడుతున్నారు. ఇప్పుడు ఆ లైవ్ చూద్దాం.
Down in growth of outward FDI increased during the period. Moreover, FPI to India has seen a turnaround in June and July this year with net inflows of 7.1 billion US dollars. This is, of course, primarily driven by the debt segment and after registering net outflows during April and May of this year. Going forward, capital flow measures undertaken in June will support inflows. As a result, the balance of payments is expected to register a healthy surplus. India's foreign exchange reserves continue to be adequate in terms of the standard metrics of reserve adequacy, with import cover of over 10 months and external debt cover of almost 91%. As for the exchange rate, as mentioned earlier, we will continue with our policy of it being determined by market forces, while at the same time curbing excessive volatility, checking speculative behavior, and preventing disorderly movements so as to ensure that it is not out of sync with the fundamentals or it is not disruptive of economic activity. For this purpose, we have a very broad range of effective regulatory and market-based instruments. Now, before I conclude, as has been the practice, I have a few additional measures also to announce. I have two measures to further strengthen the cooperative sector. One, on the basis of the feedback received on the discussion paper on licensing of UCBs, which we had done some time ago, we are now issuing draft guidelines for resuming licensing of the urban cooperative banks. Two, in light of the experience gained and the developments since 2008, when the credit monitoring arrangement for rural cooperative banks was last revised, we are issuing draft directions after undertaking a comprehensive review of this arrangement. There is one measure for interest rate on advances. In order to enhance transparency in lending rates and further strengthen consumer protection, it is proposed to harmonize and standardize the regulatory framework on interest rates on advances for all regulated entities. To conclude, global economic conditions and sentiments continue to remain hostage to the rapidly oscillating developments, both in scale and intensity, of the West Asia conflict. While these have impacted the domestic growth inflation outlook adversely, the stronger macroeconomic fundamentals of the Indian economy are helping navigate this global shock resolutely. As alluded to in my last statement, this presents an opportunity to accelerate measures to enhance our resilience to withstand such shocks. We shall continue to implement policies that further fortify our economy, whether it is facilitating sustainable growth or promoting consumer protection, whether it is preserving stability of prices, the financial system, or the currency. We will do whatever it takes to ensure the same. Thank you, Namaskar, and Jai Hind.